Greetings, positive trenders. I hope everybody is having a blessed weekend. Just want to let you know that the newsletter is ready, so I hope everybody enjoys it. This week was just an amazing week, right? I mean, it was. So we kind of start the newsletter off talking about the tweets that rock the market, right? Because this week we saw, some amazing action, right? Amazing price action, a huge, range this week of over 111 points, and a lot of it had to do with trade news and kind of tweets coming out. And so what we do is we kind of go through and we talk about, of course, on the SPX, a couple of the indicators that we saw last week that led to some of this potential movement. So, it's sometimes it's tough to see during the week when things are going so fast, but that's why it helps to kind of take a step back, look at the newsletter in the weekend, and really kind of just refocus and kind of see where we're at, right? So that's the goal. So talk about a couple other, we talk about the some of the trades this week, how we took advantage of some of the moves. We talked about Boeing and Wynn Resorts, so WYNN, how we capitalized both of those to the short side off of the 15-minute anchors. So talk about that a little bit. And then what I really go through on each of those is I talk about how I select options, right, and how I put stops on options and why and what I'm looking at, right, when I do that. So get a little bit in depth in there, and I really focus and hone in on risk and how we set risk when we have when we know what our stop is and where we get our risk level on that. And it has to do with when you're trading options, it has to do with going bar by bar, right? So you use the common stock, the price action of the common stock, and then you go to the option chart of that stock or index and gauge where where you would put your stops on. Then you measure your risk that way. And then I talk about how to kind of measure risk. And one of those is basically and take an example, with using 1% of your account, and then using that 1% of your account as your max daily threshold, right, of what you could withstand losing in a day, and then just be, if you were to lose that amount, you can walk away, kind of shut the computer off, or just sit on your hands for the rest of the day, and still not be super painful. So 1% of an account is a good kind of rule of thumb. Of course, everybody's a little bit different in their risk thresholds and their goals, but in general, so we kind of talk about that, and then talk about, let's say, we make at the most 3 to 4 trades in a day. Any more than that starts to get really into over trading, and so we look at in general how much you have to risk per trade. So if you average 4 trades per day, right, then we kind of divide that out and take a look at it. So I give an example. If you have a $100,000 account, right, then 1% of that, right, is $1,000. You take 4 trades a day, you can risk $200 per option trade at 4 trades a day, and then then you size based on that, based on what your setups are and what you find to be the most consistent. And what I showed is even with a 50% win rate, and then only a 50% average profit, right, Sharpe ratio, that you can still be very profitable, with options, doing that. So we just have to come into our own, right, and look at, kind of look at that. So I kind of go into detail on that a little bit this week. So I think you'll enjoy reading that, just as a, kind of give you some concepts on that. So and we explore using those concepts on both the Boeing and the Wynn trades. So I hope you guys find that really informative and helpful. So from there, right, we kind of go on. We kind of talk about. More exciting stuff. Some of the earnings that are coming up this week. Let's take a look real quick before we go into the SPX. Let's take a look at Uber. Uber is going to be highlighted as our IPO of the week, right? So we've had a lot of IPOs so far this year, and this is just an IPO that just failed. I mean, look at this. So here you go. So here's your. This is great here on the 60-minute chart. Inside 60, and then look at that break to the downside all the way down. So that was one place to look at it. So the daily chart couldn't even close. I think they were originally trying to open around 45. They ended up issuing at 42. About 42, and they could barely get over 45. Well, tagged 45, and then came back down and actually put in just sort of a shooting star, right? I mean, just basically an inverted hammer. So, we could see further downside on this. So continue to watch Uber in relation to Lyft too. So we talk about that. Also on the 15 chart, we like orbs are okay to trade on IPOs. Obviously, there's no options on it, but if you are a common stock trader, here's your inside 15. right? Break to the upside, 43.76, all the way up to 44, about a 1 point trade off of that. And then we had an inside bar right here, kind of a key inside bar, and then that broke to the downside, so it was 44. And obviously you can't short these, but you can still kind of see the price action on it. So it ended up being kind of a measured move down and got a little more downside. So kind of a pitiful IPO again. So just basically couldn't get through. That's why we trade the 15 orbs, right? It never broke right here. Right, never broke your 15-minute orb, to the high, but you could have still made some on the inside of that bar. So definitely a good one to consider. Great example of using the orb technique. Yeah. So from there, let's go to SPX. So let's take a look at the S&P cash. Let's go check a look at the monthly. So obviously we review this all the time, but it is important to to take a look. And in fact, let me actually go down to the quarterly. So let me go down there. Just past it. Oh, there it is. Okay, so let's see. So here's the that quarterly chart. So last time we looked, right, we took the inside quarter to the upside, and now it looks like it's putting a little bit of a shooting star here. It put all-time highs, right, took out all these levels, and now it's kind of coming back in. So this is definitely going to be worth monitoring as we go through the rest of the quarter. And then we have right now on the monthly, of course, the month isn't finished yet, neither is the quarter, but we are kind of showing a larger red bar, right? It's kind of a hammer right now, but red. So just keep that in mind. Here we show on the weekly, right? Spinning top, red. Okay, so caution is warranted there. I drew a fresh trend line here from the prior week's lows to here. So we can always move this later when we get more information. But right now, this kind of trend. I mean, it could look nastier if you use these, like right here. It shows that we're actually well below this trend. So at this point, it just depends on what type of movement we see. But this is not very bullish right here, so as you can see. So that's just something to keep in mind. We talk about how we mentioned last week the upper end of the channel, and it's amazing what a week can do. Right, it's very complicated, very difficult to trade because of this. Last time we looked at this morning star setup, right, and then basically gapped way down, so kind of invalidated that setup. And then we talked about this channel being tested at the bottom, and it did. It got here, gave you an inside day, kind of pushed to the downside. Now it's trying to get back up. So these were very bullish bars down here, but it really has to get above it and back into this channel, and it'll probably consolidate a little bit before it goes much higher. So I would expect to see some consolidation going forward. So I think a lot of people were bullish coming into into the weekend because of the huge rally that we saw on Friday, but just keep in mind where we're at. We're only retesting the bottom of this channel, so it is possible it could come off of that. So from there, just scroll down. Okay. From there we go and we talk about, we kind of move into the clouds. I kind of renamed the chapter or the section Clouds, Celts, and BBs for Bollinger Bands, and just because we really end up talking about all of that in there, but we focus on each one individually. So we talked about last time the extension over the cloud, before the December downturn, and we started to get a little bit closer to that here, and then obviously we came back in already. Wanted to see if we could stretch a little bit further over it, but couldn't quite do it. So came back down, and it's very significant too when you see that weekly tail. That tail fail broke to the downside. It was the second time it did it, and then it went down. So that's why we keep those on our alert watch list. We move. Then we kind of take a look at the weekly Keltner channel. So right now the trend is still up, starting to curl a little bit right here, but generally still up. And we got a reversion to the mean on that. We talk about this all the time. This is a significant pullback, and then a nice bounce off of that, the mid Kelt on that one. So from there, again, we go to the daily cloud. And so again, it's sort of in no man's land right here. It has some work. It's kind of floating a little bit above the cloud, and it's still below the upper channel here. So to me, it just looks like some consolidation. Might even retest this area. So just kind of looking at this, but it did fill those gaps that we were looking to fill, and so we need to definitely see what the price action looks like this week, and we have to be cautious because a tweak could happen at any time. Okay, so that being said, we kind of move over and look at the upper Bollinger Bands to see how that kind of gave us clues into last week's down move. So we mentioned previously, let me get over here, sorry, a little zoomed in. Okay, so last time we talked about how going into this week we had previously touched the upper Bollinger Band as it was curling to the downside. Now it did give a nice down move after that, then came back up, made it very tricky with this Morningstar type reversal, and then the gap down and then back up. So very, very difficult to trade if you're just patiently waiting short, right? These bars right here will make you very impatient. And then opened and then just really went to the downside, inside bar and then back down again, and then got a little bit more challenging. But this actually opened and then really pushed downside before it came back up. So yeah, but that kind of shows you significantly how those upper Bollinger Bands come into play, and that was also here corresponding with an overbought condition on the RSI. So just wanted to point that out as well. Let's go back to the daily Keltner, I think. Let's see where I'm at. Yep, daily Keltner. Give me one sec. Let me just scroll forward to that. Okay, so there's your weekly. Oh, there's your daily. Okay, so here you can see the daily is starting to turn a little bit here on the mid Kelt's kind of pointing down. A couple attempts, to bounce off the lower Kelp, but it keeps on expanding at this point. So right now the trend looks like it might be turning on a short-term basis. So that kind of supports the theory of the trend line that we looked at earlier. Elliott wave. Our counts last time were invalidated. So here's that. This is what it looks like on the daily, by the way. So you can see wherever we move this, right? So that was that morning star area. So that was that weekly. But if we were here, right, we're actually well below trend. We're starting to move below it. If we're here, still definitely below. I mean, if you put it here, that's really ugly, right? Because it came down, broke through it, and then gave you a confirmation bar. Tried to retest it and failed, right? So that's pretty scary, and that was the prior weeks, right? So all we have to do now is to see is this going to be the ultimate new trend, or was this it, right? So let's see. But right now, in general, if we go with what we have, with previous history, it's still looking, a little bit weak. So I mean, another thing we could do instead of from the lows, we could activate this and bring it up here, right? We kind of see a little bit more continuity between a couple more prices. So again, just have to keep it in, just, take it with take it as it is, and see what we have going forward. So let me put that here. Okay, here. Okay, good. Okay, cool. So let's see. So next we talk about Elliott wave. So let me get to the Elliott wave. Where is that? Why am I way down here? Give me 1 second. Okay, found it. So, okay, so here's the I just had a different drawing set on it. So here's the prior week's Elliott wave count. Oh no, that was definitely an older one. So excuse me 1 second. So here's the current Elliott wave count. What I'm seeing. Last time we were looking at a potential wave 4 down here, when we were here. But you can see if this was wave 1 previously, wave 4 has already crossed below that, invalidating that count. And so at this point, this could be the wave 5 end at the all-time highs, right? Why not? At this point. So now this last pullback could be a wave A, of a current correction. So we might see a push up to wave B, but I'm starting to be able to count an impulsive wave down. So this could be 1, 2, 3, 4, 5. And so if that was a 5 down, then that implies that if this is an ABC pattern, this is a zigzag. So we would expect 5 and then ABC, B, 3 to the upside. But the rule of the zigzag is B cannot cross over the start of wave A, which means that if we do push back up, and this is a zigzag, and we can count a definitive ABC up, it would not be such a bad idea to attempt to short back around the all-time highs. And so if that's the case, then we would get a wave C down, and we like to trade wave Cs. And so that could be a nice short, again, to the downside and start to test. I think there is a lower gap down here. Let's see, that is 27.44. Yeah, so there is still a lower gap here around the 27 area. And we talk a little bit how that we could potentially see that in a moment. And so that's the Elliott waves. And then, okay, so let's take a look at Andrew's pitchfork. Just take a glance there. Okay, so here's Andrew's pitchfork. So what happens here? So Andrew's pitchfork came off that midline pretty well. It was rejected, but in this resistance zone, it came down. Obviously a big day on Friday. But look what happens as we get down to this level here. So this is the open gap here. So if it could get below the pitchfork median line, then that may be one test, fill the gap, and then it could actually hold that as support and then back up after there. So lots of interesting stuff. But I think if this is it, right, and this is a reversal, then I think if we get through the all-time highs and this is not a zigzag and we push, then I think we can definitely test this 30.18, 30.20 level, which is the intersection of the channel and the reaction line there. So that will be very, very interesting. So with that, we kind of talk about, just go over, post the pivot levels, kind of go conclusion at the same time. We kind of look just again cautiously proceeding forward, right? So right now it's a very interesting area. So next, one of the things that we were highlighting last week was the VIX, and I actually quoted last week in this section. What did I say? Or the section above it, where we talk about how basically everything played out. But anyway, the VIX is anytime we've talked about this before. Anytime we close above on the daily on the upper Bollinger Band, right? We expect to see a reversal, right? So, but here you still had to use caution because we had an inside day on the VIX over the upper Bollinger Band, and then this was the day where things started to get a little bit scary with a lot of tweets coming out, right? So it ended up spiking really high and coming back in, still closed over the upper Bollinger Band, and then here was the key, kind of came back up again, but as it crossed through the upper Bollinger Band, right? That's about when the market started to reverse, and it came all the way back down to its essentially its 10 moving average and into this cloud. So we're not out of the woods yet, right? So the Bollinger Band, I'm sorry, the VIX is still within its cloud, so it could kind of start working its way back up. And don't forget, the last time things got really scary was way back when, and the VIX was up around 30. Back where were we? Was it here? Yeah, 36. So that was back in the December lows, and then it got all the way up to 50 back in February of 2018. So just keep that in mind. So doesn't look so scary over here, right? So, but it was a significant test, and that right there was a nice confirmation of the reversal on Friday. So we talk about that. We go through Nasdaq. We go through all the different charts. Of course, on the weekly Kelt for the fangers. So Facebook. Let's take a look. Is that my weekly? Yeah, it's my weekly here. So let's go Facebook. Let's take a look at Nasdaq real quick. And look for any, divergences there. So you can see the Nasdaq pulled back to its mid-Kelt smartly and then came off of it. Right? This is very powerful, right? So these are very powerful setups. Tough to catch, but if you have your alerts set, you can jump in them. Facebook still above, basically still pretty high up there. Facebook's pretty strong. It's definitely something we'll take a look at this week. So that's up there. Apple, pretty decent pullback to the mid-Kelt area. Amazon, still kind of floating up there like Facebook. Netflix, been chopping around between its Keltner channel, also touched its mid-Kelt. And NVIDIA is actually kind of breaking down. And they have earnings this week, so we'll keep that in mind. They may be pushing it down so it can get a bounce up in earnings. I don't know, but we'll have to see what they're up to there. Google, some of you guys profited nicely off day one. I had a nice reclaim of its first bar last week, so didn't really quite get the what I was looking for. I was considering getting in the 1150 area on Friday, but just kind of passed. As who knows what's going to happen over the weekend, right? So still definitely on the radar. I think with decent earnings and all that stuff, I think eventually it's going to move and then fill that gap above. So we'll keep an eye on Google as well as Target. We'll still keep looking at Target for some potential. So that being said, we go through those, and then we take a look at the Dow. Right, so just a real quick glance at the Dow. Right, we only had 1, 2, 3, 4, 5, 6 stocks that were red on Friday. Apple being the worst, but Apple had pulled back to its mid-Keltner channel. So in general, the index is looking okay, right? So we're seeing a lot of still some kind of uptrending stuff, but we explore that a little bit more in the newsletter, and then finally. We get to everybody's favorite part of the newsletter, and very exciting to unveil. We get to the trade of the week, and so this week's trade of the week is, drum roll. Let's go here on the daily. Is Home Depot. So Home Depot had a really nice, pullback here. I really like the consolidation, pullback, kind of pulling up, chopping around and all that stuff. Filled an open gap here. This is the breakout zone, right? This was this horizontal zone here, right, in this area. So it broke out of there, gapped inside day, kept going, slight pullback, and then up to highs, right? And then from here, it pulled back, then gap, gap, then down, nice consolidation, filled the gap, and then it held its daily cloud very well. And then so from there, I also like how it handled its weekly Keltner channel, right? It pulled back also nicely to this uptrending mid Keltner channel. And so the idea of this week is a earnings run. So earnings are going to be 521, and so I'm looking at the 524 calls, and we'll be looking to capitalize not only on the move itself to hopefully get these gaps filled, but also get some premium increase as we get closer to earnings, and then hopefully maybe even have some freebies to hold through earnings too, so that maybe we can even capitalize more to the long side. So I really like this setup. It was kind of on the short radar last week. We did get the pullback on that, and then now I kind of like how it's consolidating here. So especially if the market is nice and strong, and this is looking good, I think Home Depot has a really good chance of having some strong movement. And then I get into some other stocks too that are on the radar as well, and I hope you guys really enjoyed that. And guys, I'm really looking forward to having an awesome trading week this week. And thank you so much to all subscribers for all your support. Happy Mother's Day to all the moms out there, and hope you enjoy the rest of your weekend. And I will talk to you guys Sunday night.